Right, very good afternoon, ladies and gentlemen. Welcome to the 2024 Singapore Buy-Side Forum. As always, it's a pleasure to have all of you here. This is our largest buy-side event in Singapore and the largest gathering of our most senior clients in the region. So this afternoon's panel, we're going to start off with geopolitics. And if you've got your phones out, switch from whatever you're doing to the event app, because we're going to kick off with a poll. So if we can bring up the first poll question. Is geopolitics weighing more in your asset allocation decisions today than it did pre-pandemic? That's going to be the first question. And this is a repeat. I did the same poll last year. We were at 80-odd% yes. So this year I tried adding in a third option to see if I could split the room a little. We still have a majority at yes. All right. So 2/3 of the room says yes. I think we'll kick off with probably what's the largest, and it's been a year of elections, and that's what 2024 was described at the start of the year. But I think we have the key US elections coming up. And for us, in many ways, sitting in Asia, there are, I guess, the ripple effects of this election that we want to watch out for, whichever way the election goes. So I think for a start, maybe Angela, you can walk us through some of the foreign policy implications that, regardless of Republican or Democrat, what does this election hold for ASEAN as a region from a foreign policy standpoint?
Yeah, absolutely. And I'm delighted that the answer is yes by 68%, because I run the geopolitical risk analysis team for a company called Control Risks. So we hopefully won't be out of a job anytime soon. So, one can have a very long conversation about the U.S. election and geopolitics, and I imagine that everyone here is pretty well read on the subject and gets a lot of great news from Bloomberg. So I try to say a couple of things that you may not be actively tracking. So I'll start with saying, the election's 26 days away. It's a coin toss election. Every single poll, even in the swing states, is really, really tight. It's fascinating to me that it's so close, yet the outcome will mean something quite different for Asia. I think, conventional wisdom is Trump, if he wins, would be, again, as it relates to Asia and ASEAN, would be transactional, would be unpredictable. Certainly, we talked about volatility earlier, and would also be bilateral. So that has implications, of course, on things like IPEF, the Indo-Pacific Economic Framework. It has implications also on the IRA, the Inflation Reduction Act, which a lot of companies around Asia are invested in and getting tax breaks for and whatnot. Harris, the conventional wisdom is she would be Biden 2.0. I would argue with both of those and say, we don't really know. In both cases, there's somewhat of a blank slate. It's been 8 years since Trump was in power. He's going to have different advisors. He's going to have a different kind of mental state. Harris, we don't know a lot about her still. So I'd say the three things to point out would be for Asia would be, number one, look at what the Congress makeup is, because if Congress is all Republican and there's a Republican president, it's a lot more policy that can be done than if it's not. Look at the advisors. So Harris, as you may know, her presidential transition advisor is Ambassador Johannes Abraham, who has served for the last 2 years as the U.S. ambassador to ASEAN. That's a good thing. If she were to win, she's been through Southeast Asia region often. There's a lot there that she'll know. And I'd also say watch for the Middle East, because that, if it does get more intense, will take away some of the energy and time that either administration could spend as it relates to Asia. But in sum, I'd say, regardless of who comes to power, we know the following things. We know the U.S. is going to be focused still on the sentiments it's had with China, although it could go one of two different ways. We know that the U.S. is going to still retain industrial policy, and again, how that looks could be quite different. And three, we know there is going to be a challenge with the U.S. showing up in the region. Every single administration gets a complaint about that. The ASEAN-U.S. Summit and the East Asia Summit start tomorrow in Laos. Biden is not coming. Biden didn't go last year. It's going to be a challenge to get the U.S. to engage in the region, even if they want to, just because of other geopolitics going on.
And I think that's an apt point for us to bring probably the next poll up, which is ASEAN markets, or are ASEAN markets more impacted by geopolitical events, particularly the likes of the US elections today? I'm just keen to get the thoughts of the room, so if you can bring up the second poll, please. And here we have a bit of a split. So there is 1/3. Okay, it's moving now. Similar results. Nearly 70% says yes. And I think, Euben, if I can get some of your thoughts on this, what are the macro implications that you think would be regarding how the elections go?
Yeah, great. I would say this year's election is probably a little bit more consequential from a macro standpoint than the ones we've seen before. And here I would focus and kind of say that in a Trump 2.0 scenario, I think this is where we will get bigger consequences for the region. Obviously, trade protectionism, geo-fragmentation, obviously globally will have less growth. Our own estimate for the U.S. economy, even take into account some fiscal expansion, you'll see growth reduced by about 0.2 percentage point. Looks small, but we've got U.S. growth at 2% next year, so 0.2 is quite meaningful. And of course, it will have a lot of spillovers to the rest of the world. And obviously, some indirect implications as well via inflation, right? Tariffs are obviously very inflationary. Again, our own estimates suggest that if what Trump has been pledging and talking about gets implemented by the middle of next year, you'll see American inflation go up by about 75 basis points. So further away from the 2% target of the Fed, which means that they could pause and reassess and not continue with the easing cycle. And obviously there's a big topic nowadays with the rest of the region trying to find ways to bring down interest rates. And a lot of that will depend on what the Fed does. So that could obviously be negatively impacted as well. But on the more optimistic side, I would say this mega trend that's been happening since the U.S.-China trade wars in 17 or 18, it's benefiting Southeast Asia, particularly Vietnam, when it comes to supply chain shifts. These things have been ongoing, and I would say if Trump wins, we could see an acceleration of that trend. So we look at across the region and Asia more broadly, who are the big winners. And to me, it's really Malaysia that stands out after Vietnam. Obviously, Vietnam could be at risk of being slapped with more tariffs. But Malaysia, I think, just from the fact that it's very well connected, it's good infrastructure, political stability has returned, and there's more reforms coming through. And as a result of that, if you look at the tech sector, for example, it's not just the Chinese companies that are coming and investing in Penang or in Johor. It's actually dominated now by the tech giants from the U.S. Pledging on things like data center construction or AI-related kind of investment. So I think that trend will continue, and there are a couple of countries that might sort of positively benefit from that.
Thank you. Tamara, I'm aware Bloomberg Economics has done some work around the U.S. elections and its implications in the macro environment. Would you like to chime in to that?
Sure. So one thing that we like to highlight is that, obviously, and you, Angela, mentioned, there's a lot of, when we're trying to talk about the impact of the tariffs that could be coming after a U.S. election where Trump won, is the uncertainty. Mr. Trump sees unpredictability as an asset. And of course, there's always that dynamic of, what promises, what's said on the campaign trail gets translated into policy. So, we see some of these headline-grabbing numbers, 60% tariffs on China, 10% or even 20% universal tariffs. We see those more as an opening salvo for what could be the start to negotiations. Now, that said, the negotiations in Trump 1.0, there could be some mistrust. The Trump phase 1 agreement didn't really work out very well, and there's a lot of mistrust. So again, a lot of uncertainty of where we're going. But if we do see a mix with a China 60% tariff, I think this region would benefit the most. We could see more of the the region stepping in to fill the gap of Chinese production, the continuation of the supply chain shifts. But it's the universal tariff that we need to really avoid or hope that's low, because that's going to be the incentive that will pull the FDI back to the U.S. and it won't be coming here, and it will make that competition for FDI that much tougher for the region, I think.
All right, and to that front, I mean, we just spoke about ASEAN filling in the gap and the region filling in the gap. Though ASEAN's been very split in its approach to the US-China tensions and all of that, do you think this would be the time the region comes together?
Well, to come together, you have to have the same cause. I mean, okay, that could be, hello, US and China, please get along. I mean, that might be what they would agree on. But then you also have to have the economic power behind it. In the world, when the world was shifting towards globalization, we had the region really working hard to integrate more economically, so building its sort of unified footprint. But even then, that goal never had the objective of becoming a common currency, for example. Now, deglobalization, as I said, the competition it's tougher. I mean, a lot of these economies are competing for the same export share. They're competing for the same FDI. They're turning inwards. I see, at least near term, I don't see that happening.
Euben? So if I can jump in, the other thing that I'd add is domestic political considerations, right? Because obviously they're busy with their own issues in their own borders. Philippines in particular, there's an upcoming midterm elections, and we know there's a little bit of a rift now between the president and the vice president, and they're kind of seen as a sort of the difference in the stance of being pro-China, which is the Duterte camp, and then Marcos, which is much more pro-U.S. And obviously there's now much more incidents in the South China Sea, and that's something that kind of being watched very closely in the general public. So the election will kind of sort of be an important event in that respect. And then Indonesia is in the middle of a political transition. We're going to get a new president soon. And then obviously Thailand has its own political issues as well.
I think that's a good segue, because my next thing was going to ask you, particularly Euben, around, with Indonesia's recent election, new president, potentially a new cabinet. How do you think it's going to shift domestic policy?
Yeah.
How's that going to impact the overall investment climate for those of us in the room?
Yeah. So for Indonesia specifically, and again, I'm getting a lot of discussions with clients and our investors on this topic. Obviously, it's the biggest economy in the region. And I would say I'm not 100% buying into the story that it is a narrative of policy continuity, just because President Jokowi and President-elect Prabowo are working together. In certain aspects, maybe downstreaming policy or infrastructure and a few other things, EV battery ecosystem, those things I think are probably going to keep going. But on fiscal policy, for example, I think it might be a little bit different. We already know that if you look at the 2025 budget, a lot of the campaign pledges of the president have already been accommodated into the budget, which I don't think I've ever seen before. A president not being inaugurated yet, already having an influence on the budget. Right? So the question really is budget implementation, whether fiscal discipline might be an issue going forward. They have fiscal rules, which I think they'll still stick to for a while. But when the rubber hits the road, that's when it gets really tested, right? I mean, a lot of these campaign pledges are unfunded. They're not self-funded. They don't generate revenues on their own. So they'll have to find, ways to increase tax collections, which is, I think, is the Achilles heel of Indonesia's fiscal policy. So I think there'll be issues from that standpoint a couple years down the road, very different from what we've had in the last 10 years under President Jokowi and Finance Minister Sri Mulyani.
Thank you. Angela, anything to add from a geopolitical risk standpoint? Now, if we look at the rest of the region, Tamara, and that's broadly where your coverage is in terms of the ASEAN economic outlook, what's your view on the region? Where do you think things are going?
Well, number one, I think it first depends on what's happening near term in the Middle East. Obviously, the U.S. election and what kind of tariff mix we get. But if we go aside from that, I think, or if let's try to incorporate that, I mean, there's a lot to carve out for the region. If we look at just the oil impact, we're going to have winners, probably obviously Malaysia, the oil exporters, and sort of the more bearish case would be Philippines being the net importer of oil and also being an economy with a lower income, so really hurt by inflation, the inflation that comes with the higher oil. But if we look at the trade aspect to it, I think the economies that are more domestically driven are going to weather this storm better. So that's not to say that the small open ones won't do okay, but it's structurally you're in a much better spot to start out with. That's the Philippines and that's Indonesia. Again, though, we have to wait and see who is in the White House. If Mr. Trump is in the White House and we see more neglect of the region, that pivot of Marcos Jr. to the U.S. won't probably be pulling that much more FDI into the region or into the Philippines as before. So again, and then the small open ones, they have, like Vietnam is going to have to be worried about. I'd say Trump zeroing in on the bilateral trade deficit that has exploded since he was a president, which is probably why we're going to see universal tariffs of some form, I think. Singapore, maybe the most exposed to the external tariff implications, but maybe perhaps the most prepared and able to navigate. That's what I would just go with, big picture.
Right, and I think with that, we can bring up our third poll, which is which countries in ASEAN look attractive to look at capital to. This is a word cloud, so you can just type in an open answer, and it will basically pull out your answers on screen. And with that, you can also ask questions to the panelists that we'll take right after the last discussion. Could we bring up the third poll, please? Interesting. It's Indonesia, which is the largest. And this is an open question to the panelists. When we talk about FDIs going into this market, do you believe there is a clear understanding of the policy direction, the opportunities, the risks, or I think what's being spoken about quite a bit is the narrative on policy continuity and all of that. So does the market understand fully the risks involved or the opportunities involved? I'll start with that.
I'll jump in and say, I think the short answer I would say is no. I mean, we talk to a lot of clients around geopolitics and things that might be happening or be driven by countries, players outside of Southeast Asia, how that impacts Southeast Asia. But actually, there's a whole lot of work we're also doing for clients around country by country, what's happening here. I mean, obviously, we're still in the year of the election, but there's been a phenomenal amount of political change predicted and unpredicted around the Southeast Asia region. And even, if you think about places like Bangladesh and kind of nearby that also can maybe be impacted as it relates to supply chain. So in sum, I would say what we have a lot of our clients, we work for about 80% of the Fortune 500 and also funds. A lot of our clients are asking us things like, who are the new stakeholders, but also when do we let the ink dry on that stakeholder map? Because maybe it's too soon to even be asking those questions, right? And then how is the policy trajectory going to go given those stakeholders, but also wither the same old risks we've already had. I mean, in a place like Indonesia, there's huge opportunity, obviously, and at the same time, we deal a lot with clients on the same old issues you'd expect in any market around corruption, around, transportation issues, around payment issues, around, all the kind of same risks you might get in any market, but are more amplified in a complicated, large country like Indonesia. So I think, and some I'd say we have a lot of clients that are really still trying to wrap their head around, particularly some of the newer political transitions and what those means for their actual operations.
Euben, Tamara, any thoughts?
Yeah, for me, I'm a little bit more optimistic in that respect. If you look at the actual data from, let's say, since the pandemic, ASEAN actually as a region is collectively already increasing its share of FDI inflows globally. And it picked up steam maybe in the last 2 or 3 years. Obviously, that's dominated by Singapore, but we know some of that gets rechanneled to the rest of the region. But outside of that, actually, the rest of ASEAN has also been receiving FDI inflows on an aggregate basis. Maybe sector by sector might be different, but generally it's picking up. There, I would say, I would mention two factors. One, growth differential matters, right? This region is probably still on a path of increasing growth relative to more advanced economies and other EMs in other parts of the world. But also, too, growth potential is actually picking up because they're investing in infrastructure, doing a lot of structural reforms, and demographics are still generally favorable, except for a couple of countries, right? So I think that's one sort of big draw. And again, if you look at which country stands out, it's Malaysia, outside of Singapore, because of those factors that I talked about. And to me, that's where I think we see the prospects of a country being able to move out of the middle income trap, but also increase their move of the value chain, particularly in tech and AI. So that's putting Malaysia on the spotlight, and what it does is kind of bring in even more FDI inflows because everybody's getting a sense of what everyone else is doing, right? So again, that's kind of showing up in the latest headlines and the actual data.
Tamara?
Yeah, I would just caution on the, yes, we've seen a lot of FDI coming into the region recently since the pandemic, but my concern is that if we get a different trade, we get the tariffs going up to that next level, and it's a universal tariff. A lot of that FDI, some of it will still come here because there will be production that needs to service the demand of this region. And of course, as you mentioned, the region is growing and the demographics are less of a hurdle. But some of that FDI will be going home to the U.S. The world is becoming more uncertain. We're having to spend more money on defense, more climate defense. We've got aging populations might not be a problem in some of our region, but it is a problem in our major trading partners. And of course, we're all having to deal with the budget deficits and having to service them at higher interest rates. So not a lot of budget room, spending power is what I want to say for the public sector or the private sector. So again, I think we might be able to just breathe a sigh of relief after the election, or not. But I think we need to kind of wait and see what it says, how the votes are counted, and as you mentioned, it's not just who is in the White House, but how Congress is how Congress is laid out.
Sounds good. We've got 2 questions from the audience, and I think both are. One is a black swan event, the other one is a white elephant in the room. So I'll take both. The first, and I think, Angela, this might be directed for you. What's the likelihood of a conflict in the South China Sea?
That's a hard one to predict. I think it's one that's been coming up on the radar for our clients more, given what's been happening recently with China and the Philippines. I think there's one conversation around, do both players or other players want a conflict? I think the answer there is no. I think what we're really tracking is the risk of miscalculation or error or something And that's why it's really important to not only kind of know what's happening, but also have those dialogues open. If something does happen, if someone hits someone they actually didn't intend to, what does that mean? So in sum, it is something we track, especially since the impact to supply chain, just physically how you can move things around, would be so significant. But we don't think any of the major players are aiming to have it be a conflict.
The second one, and I think this is more for Euben and Tamara, with the fiscal stimulus in China recently, is this recovery going to be sustained or it's going to be short-lived?
Maybe I'll give it a go. For me, it's not quite a bazooka that we've seen yet, right? Because a lot of it is on monetary policy. So everyone's really looking out for fiscal policy, and we still haven't got that. So there's quite a bit of uncertainty. But again, for me, I'm more on the optimistic side. If these things start to sort of put a floor in terms of China's slowdown and maybe get us a little bit of stability, I think that can only be good for the rest of the region. And within that, again, the most exposed are those countries that are doing a lot of FDIs and trade with China. So Singapore, Australia, Taiwan, Malaysia to some extent, right? But obviously, if things don't pan out as they hope for in terms of bringing in more stimulus and reviving the economy, then obviously we're probably back to status quo, and the rest of the region trying to find their own ways to sort of offset that drag and bring in more increased domestic demand to keep growth coming, right?
I'm going to be more of a pessimist. I'm sorry. I think
I like we're not.
Good contrast, right? So one thing I think we need this. China obviously needs stimulus and they need the fiscal, but I think the crux of the issue is the gap between supply and demand in the property sector. That's the key to turning sentiment around, and that's been tricky because where the federal fiscal stimulus is more effective. Is more, the bigger cities, but the problem of the mismatch in supply and demand is more in the tier 3 cities, and that's dependent on the local governments, and that's much messier. So I think it's hopeful. I mean, seeing the stock market bounce is hopeful. I'm not sure what it did today. Was it falling or rising today massively? We need the stock market would be an important signal to stabilize, but that's at the end of the day, we still have to be looking on the ground in the local economies.
Thank you. I think with that, we've reached the end of this panel. Ladies and gentlemen, please give our panelists a huge round of applause. And thank you very much for your questions and participation.